Do we agree with Michael Saylor that ultimately this category, Bitcoin and other crypto assets, could be bigger than SPY? Yes, we do. Absolutely, we do. And Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be $20 trillion. It will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there, I mean, it runs circles around SPY, number one, and I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category.
How much Bitcoin does your ETF hold now? And if the market for these funds does get that large to, as you say, 20 trillion perhaps, how much could it hold?
Okay, so all of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million. And the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs, which have taken the friction out of buying Bitcoin and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest some of the supply out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets in at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically.
So those are the demand dynamics at the moment. And add to that the expected halving event this year. How is the price impact of this year's halving perhaps going to be different this time around because of that landscape that you've just explained?
Yes, so the halving. So we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away. Now that the market's becoming more efficient with ETFs, it might. Think about how many people even know about the halving this time around when they didn't even know what Bitcoin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is. And each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based, monetary system in history.
I do want to talk to you about the fundamentals of Bitcoin, but just there you mentioned mining. And I think maybe one of the reasons that the price comes off initially post a halving event is because the cost to mine, or rather the compute required to mine Bitcoin, its hash rate increases. And it's already around all-time highs. So if less profitable miners perhaps drop off because it's going to become more expensive to mine, they could then offload their Bitcoin into the market. How do you see that potentially impacting the price this time?
Yes, that does happen each time. But I think what we have going for us this time is the financial markets. When you've got the entire ETF infrastructure out there ready to arbitrage these sorts of events, we may pull forward the price increase and accelerate the transition you're talking about.